All right, welcome back, everyone. Today we're diving deep, no surprise there, into the 2024 U.S. election. But not just the election itself. We're going to be talking about how it might impact, well, actually how it will impact the Forex market. You guys sent in some pretty dense research on this, and I'm really excited to have our expert here to help us break it all down.
Yeah, it's definitely a fascinating time to be watching the markets, that's for sure. I mean, every U.S. election kind of, creates some waves, but this one feels different. We're not just talking about, what's happening within the U.S. We're talking about potential, seismic shifts in the global landscape.
Yeah, and one of the things that one of the sources pointed out is that 2024 is a huge election year globally. Like billions of people are going to be heading to the polls. But the U.S. election, everyone seems to be holding their breath for this one. So why is that? What makes this election so crucial, especially for the Forex market?
Well, you got to remember that the U.S. still has this massive influence on the world stage. It's the world's biggest economy, military powerhouse, and it's really like the anchor for so many international agreements and institutions. So when the U.S. shifts direction even a little bit, the Forex market, it feels it.
So basically, any changes in U.S. policy, especially anything that touches trade or international relations, that could really throw things for a loop. And, our sources really highlighted this stark difference between how Trump and Harris might handle foreign policy. Should we dive into that a bit?
Definitely. Let's start with Trump. So his America First agenda, that whole protectionist stance, that could create a lot of uncertainty in the markets. We saw it before, with those tariffs on Chinese goods and him questioning those longstanding trade agreements. If we see a second Trump term, well, these trends, they might just get amplified.
And that uncertainty, that can directly lead to volatility in the Forex market, right? I mean, I remember back during his first term, the U.S. dollar, it went through some crazy swings. Traders were trying to guess, to predict his next move. It was wild.
Exactly. Remember those tariff announcements on Twitter? Out of the blue. Forex market, it hates surprises. And, well, with Trump, surprises were kind of, the norm. And that kind of environment, that unpredictable environment, that makes investors really nervous. And when investors get nervous, well, that nervousness, it often shows up as volatility in how currencies are valued.
So Trump is kind of like the wild card then. What about Harris? Our sources are saying she'd probably stick to a more traditional approach to U.S. foreign policy. How do you think that would impact the Forex market?
Well, with a Harris administration, I think we'd probably see a return to those more predictable policies. There'd be an emphasis on diplomacy, cooperation with other countries and agreements that involve a lot of countries. And this predictability, that could be a really stabilizing force, might even lead to less volatility and a stronger U.S. dollar.
So are we saying a Harris win would be like a safe bet for the markets?
Well, not necessarily. It's important to remember that Forex markets, they're really complex. So there are tons of factors influencing them all the time. Even if a Harris presidency leads to, a more stable political environment, her actual policies, those could still definitely impact how currencies are valued.
Yeah, that's true. It's not just about who wins, but it's also about, what they actually do once they're in office.
Absolutely. We have to look beyond just the personalities and really dig into what those policies might be. For example, Harris has talked about spending more on infrastructure. That could give the U.S. economy a boost, and that could then lead to a stronger dollar. But then again, her policies on the environment, those could impact certain industries, and that might cause fluctuations in specific, currency pairs.
And this is where things get super interesting for anyone who's involved in Forex trading, right?
Yeah.
It's all about understanding these subtle differences and trying to predict potential policy shifts. It's crucial if you want to make smart decisions.
Couldn't agree more. The 2024 election, it's not just a political event, it's a potential turning point for the global economy and the Forex market right along with it.
Okay, so we've got this potential tug of war between Trump's unpredictability and Harris's more, traditional approach. But how does all this uncertainty actually play out in the Forex market? Can you give us some real-world examples? So let's say, just for example, you're holding euros, right? And Trump gets reelected. What could happen then?
Well, if Trump really digs in on that protectionism thing, we could see the dollar weaken, global trade would get messed up. And that could mean your euros would actually be worth more compared to the dollar, I mean.
So good news for anyone holding euros in that situation.
Yeah.
But we know Forex is all about pairs, right? So what about other currencies? Our listener is particularly interested in what this all means for Asian markets.
Right, and this is where Trump's stance on China becomes super important. One of the sources we got, a report from a geopolitical risk firm, it suggests that Trump could push for even higher tariffs on Chinese goods, like way higher, maybe even reaching 100%.
100%. Wow. That's a massive jump from those 25% tariffs he put in place during his first term. What would that kind of a jump do? What kind of ripple effect would we see?
Oh, it'd be a huge shock for sure. The Chinese yuan, it would probably drop in value a lot compared to the dollar. Now, this would make Chinese exports more competitive, but it could also trigger, capital flight, and it could even destabilize other Asian currencies that are, connected to the Chinese economy.
So currencies like the Japanese yen or the South Korean won, those would be hit pretty hard then. They're both tied to trade with China in a big way, right?
Exactly. And it's not just the direct impact of those tariffs we got to consider. I mean, a trade war with China, it could escalate into something way bigger, a real geopolitical conflict. And that would just add fuel to the fire, even more uncertainty, even more volatility in the markets.
Okay, so this is all sounding pretty negative so far. Are there any potential positives here? Anything good for Forex traders if Trump gets a second term?
Well, there are always opportunities when things get volatile, but yeah, they come with higher risk for sure. Like, for example, if the dollar really weakens, commodities, things like oil and gold, which are priced in dollars, they could suddenly become way more attractive to investors. And that could be good news for countries that export those commodities, like Canada or Australia. Their currencies might benefit.
So a weaker dollar, it's not necessarily bad for everyone. It's all about, understanding those potential shifts, understanding how things could move, and then positioning yourself accordingly.
Exactly. And that's where good analysis comes in, a solid understanding of the global economy, global politics, all those trends. It's not just about reacting to the headlines. It's about trying to anticipate those moves, understanding the underlying forces, what's really driving the market.
And that's why having access to different sources, like the ones our listeners sent in, that's so valuable, right? It helps us connect the dots, see the big picture.
Absolutely. The more perspectives we have, the better we are at making smart decisions.
Okay, let's switch gears now and talk about Harris. We talked about how she could bring stability to the Forex market, but are there any specific policies, things she's proposed that could create opportunities or maybe challenges for traders?
Well, one area to watch is her stance on climate change, for sure. Harris has made it clear she wants the U.S. back in the Paris Climate Agreement, and she's talking about investing a lot in renewable energy. Now, this could have a huge impact on the currencies of countries that rely heavily on, fossil fuels.
Like, for example, the Canadian dollar, right? It's pretty closely tied to the oil industry. So if demand for oil drops under a Harris administration, that could put some downward pressure on their dollar.
It's definitely a possibility. But on the flip side, you have countries that are leading the way in green technology, like Denmark or Germany. Their currencies, those could benefit because investors, they'll be looking for ways to, capitalize on that shift, that transition to a cleaner energy future.
So even if things are stable and predictable, there's still going to be winners and losers. It all depends on, the specific policy choices that are made.
That's how the Forex market works. It never stops evolving. It's constantly adapting to new information and those shifting, global dynamics.
Okay, we've covered trade wars, climate policies, the impact on different currencies. But what about the big one? The U.S. dollar itself. We know it's the world's reserve currency, but could it actually affect that status?
That's the million-dollar question, right? And it's one that a lot of people in finance are debating right now.
Yeah.
Some analysts think the dollar's dominance, it's already fading no matter who wins the election.
They point to things like, losing debt in the U.S., China's growing influence, and all those new reserve currencies popping up, like the euro.
Right. But this election, it could definitely speed things up or maybe slow them down. If Trump's policies lead to more isolationism, more instability, well, that could weaken confidence in the dollar, and that could really accelerate its decline as, the world's top reserve currency.
But then a Harris administration, with its focus on, diplomacy and working with other countries, that could actually strengthen the dollar's position, at least for a while.
It all boils down to perception, and trust. If the U.S. is seen as a reliable partner, stable on the world stage, the dollar, it'll probably stay strong. But if there's doubts about America's commitment to its allies, its role in the global financial system, well, the dollar, it becomes a lot more vulnerable.
So this election, it's not just about, who sits in the Oval Office for the next 4 years. It's about the future of the U.S. dollar, its place in the world.
Exactly. And that's why understanding this election, what it could mean for the Forex market, that's so important. Not just for traders, but for anyone who cares about the future of the global economy.
We've covered a lot today. The potential for trade wars, the rise of green energy, the future of the dollar. But there's one more thing I want to explore, this issue of stability, political risk.
Yeah, that's a big one that often gets overlooked, especially in a market like Forex, which is so data-driven.
We got a report from a political risk consultancy, one of our sources, and it highlighted this concern about, well, the potential for political instability in the U.S., no matter who wins. They point to things like, how divided the country is politically, the erosion of trust in institutions, and the rise of those extreme ideologies.
Those are serious concerns. They can really impact the Forex market. Investors, they hate uncertainty, and political instability, well, that's just a breeding ground for uncertainty.
So even if the economy is doing well, if there's a sense of political risk, that can trigger capital flight, and make the currency drop in value.
Absolutely. We've seen it happen in other countries, political turmoil leading to full-blown currency crises.
And the U.S., it's not immune to that. I mean, we saw the attack on the U.S. Capitol, and some people are worried that this 2024 election, it could be even more contentious.
It's a sobering thought, for sure. And this perception of political risk, it's objective, but it can have real consequences in the Forex market.
Which brings us to safe haven currencies. Can you explain what those are and how this election, how might it affect them?
Safe haven currencies, they're currencies that people see as stable and reliable, when things are uncertain or there's some kind of crisis happening. They tend to go up in value as investors try to protect their assets, shield them from all that volatility.
So the classic examples are, the Swiss franc and the Japanese yen. Are there any others that might come into play with this election?
Well, the euro, that could be seen as a safe haven too, especially if people start to get worried about the U.S. dollar's stability. And gold, it's not really a currency, but it often acts like one, like a safe haven asset when there's a lot of geopolitical turmoil.
So if this election, if the results are contested, or if there's just this, feeling of heightened political risk, we could see people moving their money into these currencies, into these assets, right? Like a flight to safety.
It's definitely possible. And that's why it's so important for Forex traders, to be aware of these potential scenarios and to have a plan, a strategy for managing risk when things are volatile.
This has been an incredible discussion. I mean, we've really covered a lot of ground. I'm starting to see this big picture, how politics and economics and the Forex market, they're all connected, this intricate web. But I'm sure our listener still has questions.
I'm sure they do.
Oh,
and that's great. Curiosity is the key. It's how we learn.
Well, before we wrap up, I want to leave our listener with something to think about, a question based on all that we've talked about today. So given all this potential for volatility, all the uncertainty surrounding this election, what steps can Forex traders take, to reduce their risk and maybe even capitalize on the opportunities that might pop up?
That's a great question. And it's one that each trader is going to have to answer for themselves. It depends on their own risk tolerance, their own investment strategy. But there are some general principles that everyone can apply. Like, one of the key takeaways here is that staying informed is absolutely crucial. You got to monitor the political landscape. You got to understand how those policies might shift. And you got to keep an eye on those economic indicators. It's all essential if you want to make informed trading decisions.
So it's not just about watching the polls, it's about watching the markets too.
Exactly. And don't be afraid to seek out expert advice, read some analysis. There are a ton of resources out there that can help traders navigate these, sometimes choppy waters.
Great advice. I know I'm going to be paying way more attention to this 2024 election now, not just for my own finances, but also because, well, it's just fascinating.
That's the spirit. Embrace the complexity and never stop learning.
I love it. Couldn't have said it better myself. Listeners, thanks for joining us on this deep dive. We'll be back soon with another fascinating topic. Until then, keep exploring, keep questioning, and keep diving deep. Okay, so we're back. And, it's amazing how much we've already talked about, but there's still so much to consider with this election and how it could impact Forex.
Yeah.
Before we finish up, I really want to make sure our listener has some solid takeaways. They've sent in a ton of research, so it's obvious they want to figure out how to how to navigate this whole situation.
For sure. We've covered the big trends, the potential for things to get shaky, those safe haven currencies. But let's get practical here. What can Forex traders actually do? How can they get ready for the potential storm, you know?
Yeah, because knowing stuff is great, but what's even better is knowing what to do with that knowledge.
Yeah.
So where do we even start?
Well, I think the first thing is to really accept that this election, it's different. It's not like the others we've seen recently. The stakes are higher. There's a real chance for some major disruptions. And the Forex market, it's going to react to all that. So just sitting back and waiting, that's not an option.
Got it. So buckle up. What's next?
Next is information. Don't just, skim the headlines or get caught up in what people are saying on social media. You got to dig deep, like our listener has done, get into that research, really understand what those policies each candidate is talking about, what they could actually mean if they get put into action. Find reliable sources, the ones that analyze the economic and geopolitical landscape. They're the ones you can trust.
Our listener did a great job with that, sending in all those reports from think tanks, risk experts, even academic papers. I mean, they definitely get the importance of seeing things from different angles.
That's fantastic. And don't forget the technical side of things either. Look back at the historical data, study those chart patterns and, those currency correlations. You got to understand how the market has reacted to past events, political stuff, both here in the U.S. and around the world.
So it's about combining those two things then, the fundamental analysis, like the politics and the economics, and the technical analysis, what's actually happening in the Forex market.
Exactly. And don't underestimate the psychology of it all either. Fear and greed, those drive markets just as much as any data or analysis. Know your own risk tolerance, how much you're comfortable with. Don't let the hype or the panic, don't let it sweep you away.
Yeah, but that's easier said than done, right?
Yeah.
When the market's going crazy, it's hard to stay calm. Any tips for staying grounded?
Having a clear trading plan, that's really helpful. Know when you're going to get in, when you're going to get out, set those stop loss orders so you limit how much you could lose, and then stick to the plan. Don't chase the market. Don't make decisions based on emotions.
So discipline is key. But what about specific trading opportunities? Are there any currencies, any pairs that are, more interesting than others with this election?
Well, that's where things get a bit tricky. It really comes down to your own perspective and how much risk you're willing to take. But if you're looking for those volatile plays, the U.S. dollar pairs, those are the ones to watch for sure.
Yeah, makes sense. The USD GPY, the USD, GBP USD, those are the major players, right?
Yeah.
They could swing pretty wildly depending on who wins and what policies they put in place.
Absolutely. And don't forget about the emerging market currencies either. Those tend to be more sensitive, to the overall global risk sentiment. So they could be especially volatile leading up to the election and then, in the aftermath as well.
It sounds like there's no shortage of opportunities then, but also, plenty of risks to keep in mind.
That's the Forex market for you, especially in a year like this. But that's also what makes it so exciting, right? It's dynamic, always changing. It reflects all the complexities of the world we live in.
This deep dive has been amazing. I've learned so much, not just about Forex, but about how politics, economics, global events, how they're all connected. I feel like I really get it now. The forces at play, the different things that could happen.
That's what we strive for on the deep dive, to give our listeners the knowledge they need, those insights so they can make sense of the world and navigate it with confidence.
Well, you've definitely achieved that today. I know our listeners walking away from this episode with a lot to consider and a renewed sense of purpose in their Forex journey.
I hope so. And I encourage them to keep exploring, keep researching, keep diving deep into the things that matter to them.
I couldn't agree more. Listeners, thank you so much for joining us on this exploration, this deep dive into the 2024 election and what it can mean for the Forex market. Until next time, stay curious, stay informed, and keep diving deep.